Hello, everyone, and welcome to Risk. I'm Lee, and I have Mr. Dave Kranzler today. Consider a friend. We've had many discussions in the past, and it's great to speak with him again. How you been, Dave?
Not too bad.
It's great to have you back here. An awful lot going on. A lot has transpired since we last spoke. What's your take on the market in general these days? What's going on? Anything hot on your list to talk about?
There's just so many people out there, and people, analysts in the mainstream media and the propagandists, they're all just begging for a bottom, and they're looking at, technical indicators that, when you have like sort of normal times might give you an indication that, yeah, we might get a bounce, an extended rally here, things like sentiment, momentum indicators that are highly oversold, et cetera, et cetera. But I think we're in a period of time where the buttons that you would press to make money in this market for the last, since 2009, since the Fed started printing money, I don't know that those are going to work this time around. We'll see. Yesterday's a good example. Earlier this week and over the weekend, all of the purveyors of permabull porn were pointing to worse sentiment now than March 2020. More oversold than March 2020, blah, blah, blah. And, we had a brief bounce Monday morning. The cheerleading worked for about an hour, if that long, and then it reversed again. And,
I've been following, I follow a lot of those indicators myself. And one thing I've noticed this past, few weeks, it's similar to when we're in a very strong bull phase, where you get these extremes and you expect it to pull back, but it just pulls back a little bit and then it continues up.
Yep.
We're doing that on the downside right now.
Yep. That's actually a good way to put it. I mean, and it's going to get worse. The market, I don't care what anyone says. I think most people understand it, since 2008, and especially since March 2020, the market has been surely a function of the increasing Fed's balance sheet and the money that they've printed.
Absolutely.
So, and I mean the correlation is, it's definitive. You can't argue about what's happened and what the Fed has done to the markets, and I think now they're trying to unwind that. And it's going to be extremely painful to the downside. And the Fed's balance sheet is starting to decline slightly, but a lot of people aren't looking at bank reserves and deposits, and those are falling faster than the Fed's balance sheet. And those are two key monetary indicators that can give you clues on the next direction of the market. Because when the reserves fall, that means these banks have to pull back on leverage, and leverage is what's fueled the stock market for the last decade. So it's going to be interesting to see what the market does over the next couple of months, because theoretically, anyway, according to the Fed, their QT is going to double. Not that it's, in relation to the size of the balance sheet and how quickly they inflated it. The QT is minuscule, but look at the damage that it's already done. So, and interest rates, interest rates aren't even close. Fed funds rate isn't even close to the real rate of inflation. But even if you use the CPI phony rate of inflation, it suggests that the Fed funds rate, just to get to a neutral level, should be north of 6%, right? Actually, 8%, I guess, is what the last year-over-year reading was.
What do you think the world would be like if we were actually tracking the interest rates to the rate of inflation, and not the CPI number, but the one that Shadow Stats puts out?
Mad Max. If they were going to walk interest rates, whether they do it quickly or over the next year up to 8%, it would devastate everything. It would probably blow up the entire global financial system.
You look around, what fundamentals are driving a bull market in the stock market? We have the major pipeline supplying Europe blowing up. We have war in the Ukraine. We have all sorts of supply chain issues. I don't see anything rosy and bullish out there at all. Do you?
Well, that's why everyone's hoping for a Fed pivot. We have a whole generation of money managers and day traders, hedge fund managers, hedge fund algos that are geared toward operating in an environment where the central banks are printing money and keeping rates at zero. So
We have a completely synthetic economy.
yes,
Let's
exactly.
talk a little bit about the manipulation that we know has been going on in the Comex. To some extent, there's proof out there. I mean, people have actually been charged with a crime of manipulating silver. Do you think that this is going to continue? Do you think the days of manipulation are coming to an end?
Well, first of all, let's be clear about one thing. These people that are charged with crimes and convicted of manipulating the Comex, the so-called spoofing, those are low-level desk traders at these banks. They're scapegoats. And I think this last time around, was it JP Morgan, I guess a manager above the desk trader also was implicated. But these are low-level people. The manipulation that's going on at the Comex and on the LBMA, that's being done at a very high level, and it's orchestrated by the Fed, the ECB, the Bank of England, and it's being done on behalf of these governments that are issuing fiat currency. Most prominently, obviously, the U.S. I mean, if the dollar, I mean, if gold, if they stopped manipulating gold and allowed price discovery to find where the true level where gold should be trading, and I'm talking about, pulling back the layers of COMEX futures, LBMA forwards, the paper derivative versions of gold and silver, which are multiples of the real supply and demand for physical gold and silver. It would destroy the dollar, because all of a sudden you'd have gold would double very quickly, and it would force everyone to say, what am I missing here? Maybe the dollar is flawed. Maybe it is radioactive waste. And you'd see a gold rush, a massive gold rush.
It's interesting in discussions on, with other people, the fact that this is also happening in the oil markets now, the oil futures, where they're coming in first thing in the morning and they're slamming down the price of oil. So you have to wonder, is it going on there, and is it the same group that's doing it?
Well, that's a good question. I mean, honestly, I think, well, first of all, it's harder. I do think oil is a manipulated market, and obviously, OPEC can turn on or turn off the spigot. Now, apparently, the U.S. with the SPR oil can turn on or turn off the spigot. But it's a different situation, because oil is a depletable commodity, and the world needs it to run on a day-to-day basis. You don't. I mean, although I believe we should be on a gold standard, gold and silver's industrial uses that use up 70% of it, but a lot of that gets recycled. So, gold is just about every ounce of gold ever mined is still above the ground somewhere, whether it's in vaults, all over the world, or, safes in people's closets or whatever. So, to the extent that oil is a depletable asset, and that there's always constant demand for it, it's a little bit harder to manipulate. And I think a big part of the decline in the price of oil has been, this massive dumping of SPR oil on the market that I think ends in October. Yeah. At some point, the price of oil is going to bounce higher again. I mean, I think Russia and OPEC are already talking about cutting production. I think I saw that headline the other day. So, it's kind of like when Japan, the Bank of Japan last week intervened in the yen. It bounced the yen for about 15 minutes, and then boom, it went right back down. I think now there is the economic side of the equation with oil. There's certainly less demand for oil because economies are crashing. We're seeing that in the U.S. with gasoline consumption, but part of that is also higher prices. So, but I think the price of oil probably will bounce back once the SPR spigot is turned off. So we'll see. It's not going to happen right away, I don't necessarily, but I do think it will bounce back.
What about the real estate market? Do you have any thoughts on that?
Oh no. I mean, certain areas are going to be hit a lot harder than some other areas, and there's going to be certain areas that are a little more stable than other areas. But at least in terms of the U.S. housing market, sounds like the same thing's going on in Canada, all over the world. In fact, I think when this down cycle in housing is complete, I think people are going to be shocked at how low prices could go. I mean, I think you could see from the top, I think you could see home prices fall 50%. I mean, again, that's an example of another asset where, so all that money that the Fed printed, really since 2008, it took a long time to show up as price inflation in everyday goods, right? But a lot of that money, the inflation was reflected in what happened with the stock market and with what happened with housing. And houses are much more highly leveraged than the stock market. And the stock market's 50% margin based if you're at full margin, which we're not anymore, but we were at full margin at one point or pretty close to it, at least in terms of the retail numbers. But housing, I would say, I bet at least half of the buyers over the last 3 to 5 years were putting down less than 10% on their mortgage. It's not going to take much of a price decline before you're underwater on your house. So we had a housing price bubble, not necessarily a volume bubble. The volumes never got as high as they did in the previous housing bubble, the sales volumes. But so it was primarily a price bubble, and that's going to unwind as the Fed, pulls back its balance sheet. I mean, look at what it's done to the housing market just with, everyone's talking about, oh, this is a record rate of increase in the Fed funds. Yeah, but guess what? It's gone from 0% to 3%. Big deal. I mean, The average Fed funds rate over the last 40 years has been, north of 5 or 6%, somewhere between 5 and 6%. So we're not
remember the high interest rates of the early 80s?
Yes, right? Absolutely. But I mean, even including that period, if you just look at a long-term chart on right. The FRED database of the Fed funds, it's like, somewhere between 5 and 6%. So, I mean, we're only halfway back towards regressing towards the long-term mean in the Fed funds rate. So, and as they keep raising it higher and higher, it's just going to make things worse for the housing market. The housing markets, for the most part, except for certain areas, is basically ground to a halt.
What do you think of the crypto space right now? Do you think it's dead and gone forever, or you don't want to make that call?
I mean, I have my own views on crypto, and it's, crypto is like a lot of things. It's like just trying to discuss religion and politics. I mean, I personally believe that at some point there, and I think this will be a worldwide thing, not just a World Economic Forum, let's squash the masses operation. I think there's going to be central bank digital currencies, and what they'll look like, and who the issuers will be, and how it'll all function in a global economy remains to be seen. But I think the only reason that these private cryptos exist right now is at the mercy of the central banks and the BIS. I mean, you can go to the BIS website, and there's, I think it was the spring of 2021. One of the high ups in the BIS was on a speaking tour, and he was talking about, he said, look, central banks are working on digital currencies, and this is paraphrasing, that's what we advocate. And people need to understand that at some point their Bitcoin investment may go to zero. So, and these people that, I don't know, I think there's been a handful of people that have gotten fabulously wealthy off of Bitcoin. Mm-hmm. But, most of the people, especially where the price is now, unless they bought in the early days and held and are still holding, a lot of people are underwater in it. I mean, look at Michael Saylor, the MicroStrategy guy.
I still remember his conference that I watched, and I'm like, this guy is just a phony.
I mean, for me, it's emblematic that of who he is and what he is, that he was nailed for accounting fraud in late '99 with MicroStrategy. To me, he's just walking fraud. And so it's
Yeah.
emblematic to me of what, you know, Bitcoin probably is. So, I think it's a Ponzi scam that the relatively few have, like I said, have become fabulously wealthy. And I think a lot of people are going to be left holding the bag when this era is over.
Certainly a different conversation than we would have had maybe a year or two ago.
No, same conversation. I've always felt that way about Bitcoin.
But I mean, as far as the performance of Bitcoin goes,
that brings up another point. I mean, the volatility in it is stunning. And these predictions that corporations would be using it, as freely as they use digital dollar credits and things like that. I was just like, there's no way. If you're a treasurer for a big corporation or a CFO, you can't deal with the volatility of Bitcoin and try to manage your finances.
No, I agree 100%.
Any of them for that matter.
Mm-hmm. I was always very skeptical of, not just Bitcoin, but all of these, and I always related it to the internet bubble. It always reminded me of it.
Yes.
When people were talking about it and everything else. And I used to follow this guy who day traded it. I just found his trades interesting, and he kept pointing to this chart as Bitcoin was declining. I forgot what it was, but he's like, well, we got to follow this. We got to follow this. Well, it's just gone down from there. So it never took the bounce that he was predicting.
Well, I ran charts on it a couple of years ago, and I used to write about it more often than I do. But I mean, the easy money shorting Bitcoin's been made. And same with MicroStrategy. I mean, I was recommending MicroStrategy as a short in my short sellers journal from 600 all the way up to 1,000. And I, doubled down on it at 1,000. Look where we are now. I mean, it's what, $200? I mean, he's going to bankrupt that company with that Bitcoin position. I had run this chart a couple of years ago and noticed there was just like about a 90% correlation between the directional movement of Bitcoin and the directional movement of the NASDAQ. I mean, so for me, that just illustrated the point that Bitcoin was, as you mentioned, the dot-com bubble and the internet stocks. It was nothing but another vehicle of momentum-based speculation.
And I agree 100%. I noticed the same thing.
Yeah.
They would trade together, NASDAQ
right,
and
exactly.
Bitcoin. Absolutely, yep.
And so people shouldn't be shocked that Bitcoin's gone from 65 grand down to 19 grand in the same space of time that the NASDAQ rolled over in November of 2021. I don't remember exactly when Bitcoin peaked. Bitcoin might have peaked a little bit before the NASDAQ did, but they've both gone down in tandem, just like they both went up in tandem. So in terms of what I'm shorting now, I mean, I think that home construction sector, and it's not just the home builders. There's actually some other stocks that I've been featuring in my short sellers journal that haven't even come close to repricing what's coming in the housing market. Some of the home builders are in the process of getting devastated, like Beazer Homes. Yeah, see, it's below 10. It's down 2% today. And that's probably headed to zero. But the easiest money shorting that's already been made. There's a couple home builders that I focus on from the short side. And I have, I use long dated near money puts on those. I had actually featured CarMax, and I need to go back and look to see exactly when, but I'm pretty sure it was after their first or second quarter earnings in the spring. CarMax lost 25% of its value yesterday, and it's way below where I was recommending shorting it. So, and then Carvana is a perma short for me. I think Carvana is going to go bankrupt and the stock will go to zero. Part of what's holding it up is the huge short interest in the stock because it's such an obvious short. And of course, Tesla.
Dave, let me ask you, how do people find your work? You have a website that we can link in the description below and et cetera?
Sure. It's investmentresearchdynamics.com. And I write and publish the Mining Stock Journal and the Short Sellers Journal. And there's links to both of those for more information at the top. And I actually think that, I mean, obviously most of we gold bugs have been saying this for, a while now, probably better part of 6 months. But I think the precious metal sector and the mining stocks are basically finishing up a multi-month period of consolidation and are getting ready to move higher.
Absolutely. I think we've been kind of, since that run up around COVID in 2020, we've just been kind of consolidating and waiting for the next move higher of a very much longer term bull move.
Yeah, I mean, yeah, I was happy with that move on a short-term basis, but I was looking at it and I'm like, this is going to be what happened after the market bottomed in late 2015, early 2016, where we had about a 6-month moonshot. And then the market actually, the precious metal sector actually peaked in August 2020, grinding lower since then. And this last push has been in correlation with the entire stock market. But at some point, I think, just like in '08, I think we'll see the stock market continue to go lower and the precious metals sector diverge positively. The mining stocks this week have outperformed the general stock market by a considerable amount. So it's possible that we might be seeing the beginning of it now. I don't know. I've learned after 2 decades of trading and investing in this sector that it's impossible to put timeframes on it. I just think between now and a year from now, the precious metal sector will be a lot higher.
Now, I've been very bullish on silver for a long time now. Especially just post-COVID or during COVID is when I became really bullish again. And I'm just looking at the long-term chart. It looks like we're kind of in support area now, going back to like 2012. We're testing that. I think we've just been consolidating and correcting from that big move up. So
yes.
We'll see. But I'm completely with you on that.
I think the next month and a half is going to be really interesting to watch, with the midterms coming up. Let's just say I think it could get really interesting in the second half of October and, up to the midterm elections.
I'm putting my seatbelt and crash helmet on.
Yeah. That's probably, good advice to give anyone.
It certainly will be interesting. We'll definitely touch base between now and then. So, Dave, thank you so much for coming on. I appreciate it.
Thanks for having me on, Lee. It's good to see you again.
Good seeing you as well.